So it's been a while, I know. Market Mobster here on the Learning Crypto channel. We're going to do a monthly analysis kind of roundup of what's been happening. I'm not going to go over Luna. I'm not going to go over UST. We're going to go over the price analysis and what is kind of happening over the next coming weeks, right? That's important. So, first thing we need to look at, go on to Seeking Alpha. Let's have a quick butchers of what's happening in the market. Now, for me, overall, we have some stuff happening. We've got ECB stuff today. We've got CPI indexes tomorrow. We've already had some random stuff this week. It feels like the market's on a bit of a pivoting point and it's annoying me. But as I say, things could get interesting. If you are wanting to learn, genuinely bored in a bear market, want to learn, make sure you do check out our platform and stuff like that because it will help you. We're getting a lot of people come in. Now, it blows my mind, this. A lot of people are coming in now to learn via this market other than the bull market, which is madness in itself. So make sure before you invest or throw money at certain things or you're looking to kind of gamble off what people are saying on Twitter, make sure you don't, please, because you will probably lose. So just make sure you understand that. Overall, though, if you're wanting some free content, we're going to be doing a load of tutorials. So there's a tutorial tab there. Gaz does a lot of weekly stuff anyways. I'm doing a monthly analysis like this, and I'm also going to be doing some tutorials. So there'll be a lot of new, fresh videos coming out very, very soon, which will hopefully give you a little bit of a rundown of certain platforms, how to do certain things, make it, an easier journey for yourself. Anyways, we need to talk about the pricing, don't we? Now, futures don't look too bad today so far. The dollar, personal opinion, I think this is going higher. That's my overall bias in terms of looking at not so much the technicals. Please, guys, please, right? I want to say something now. Listen to this. Do not use technical analysis on the dollar index. Just look at momentum. Look at the direction, right? So this is over 6 different currencies and 24 different countries, essentially, right? This is what everything is in terms of currency pairs against the dollar. You've also got to look at the bond sort of market, the credit market, the mortgage rate market, all the economy based off what is happening here. Now, I personally believe we are going to go higher. Personally think we're going to go higher. And then when a recession potentially happens, we're going to see weakness in the dollar anyways, because obviously for one reason, it'll probably be the correction of this, which will form the correction or the recession essentially, right? So I personally believe we are going to go higher. We have been higher before. And we've got to look at the facts of where things can go. Now, traditionally, in a recession, we pull back quite aggressively. This was like the last recession where we did some massive pullbacks. It wouldn't shock me in the slightest if we do go up towards these, up to these sort of levels up here and then sharply pull back. 9 times out of 10, though, and I'm not saying that this is going to happen in the future, with a recession, I know cryptocurrency has not had one when, we've been in that cycle, but if the dollar goes down, usually crypto goes up. So we'll see how recession-proof Bitcoin is and crypto is. So let's just see what happens. But right now, fundamental-wise, of the traditional markets, not looking great. SPX, for example, go to the weekly time frame just to show you some stuff. Not looking great, right? So we're in a mega downtrend. We've pulled up to this level here. We're starting to show signs of weakness here. We could be going down and forming the next leg. Obviously, these are the old legs. I've added a new set here recently. But I do think this big level over here is the overall, bear with me, is the overall structure of the entire market, which is going down to here. But I also think we could go lower down to these points. If I go to the 3-month time frame, you'll see this in more detail. When people say to you, oh, we're not going to pull back much, Ash, the stock market looks absolutely fine. And then you show them this chart and you're like, oh, okay, I know what you're saying now. So just to kind of simplify this a little bit, if I just remove that briefly, the entire run to this drop, it wouldn't shock me in the slightest if we go down here. It would not shock me if we go down to the COVID crash levels as well. So if we're talking technical analysis and potential recessions, people cutting back on their money, where's this bull market going to come from? I don't know. However, we may well find that people use cryptocurrency as a hedge against it. Potentially, who knows, maybe even a percentage of wealth might help. We'll go from there and we'll see what's ultimately going to happen. Anyways, I don't want to dwell too much on the traditional finance because I know it will bore people to death. I want to look at some other things. So for obvious reasons, we're going to start off on the monthly time frames. and have a little look essentially at what is happening with BTC right now, right? So that's a 3 month time frame. Pretty daunting, isn't it? The monthly, right? The monthly for me is looking pretty sleek. Now, indecision is the thing, right? It's not a very big candle, even though we are 9 days into this month. It isn't, it's tiny. It's only gone down by like $2,000. It's ridiculous. Now, when we look at this, it is in a clear downtrend. You can see that we've had this high, we've had this low, lower high, new low. Now, traditionally, you'd be saying, right, we should be going up right now, but we could also form a much bigger low and then pull up, right? The one thing that always scares me in this market, in any market, is wicks. Wicks will always play a trick on you and they will always get filled at some point in the future. Now, some people don't believe that mentality. I do, right? Same with the Fibonacci, same with these pumps that we're seeing in altcoins. They will all go back down to those original pump days. So eyeballing Polkadot in my eye line here started off around $5, give or take, and it popped from $5. There's a high chance we're probably going to go back down to $5 again. Same with Ethereum when it took off again. You know, all these kind of coins will probably go back down to their basis, which is always why I always identify and look at the range of between 14 and 12k for Bitcoin as a potential area. So if we're going to highlight a level, it'll be basically, let's just be honest here, we're going to be looking at levels, I think, around here, where I know people are like, oh my God, you're so dumb. Why are you talking about this? But we've got to look at history before we start looking at the future, right? The only basis what technical analysis gives us if we look at the past, right? That's kind of, you can't predict the future. But what you can look at is previous cycles. I've already mentioned this in previous videos. If we are going to do a retracement near around the last cycle, which was between 84 and 86%, that's happened twice now in a period of years, not just like two little taps. We're talking 2013, 2017, 2018 sort of retracements here. Big, massive corrections, and they've all given us that kind of basis of a number. Now, even if this is going to happen from the all-time high down to these levels, you know, that is like an 80, you know, a lot of people talk about 80% give or take. That's still, you know, 12,500. A lot of people are disregarding the $12,000 figure. Now, if we start looking at other situations here, we can see that we've had this impulse here. We're pulled back into this region, there's that level. But if we actually do it from the overall highs here, just to show you some previous stuff, to this previous bottom, you can see again how we've hit this 382, 23k, 10k, right? I think this level, this past data is hugely important for what Bitcoin is going to do and potentially achieve in the long run on the monthly time frames, right? We have got to look at the fact of as well, and I've mentioned this before, if we lose this level here fully, like fully body closures and all kinds of ugly stuff, we've got a big gap. We've got a big gap, and that big gap, you know, if we're going to go from body closures here to body closures, like there's nothing there, absolutely nothing there on the monthly time frame. Let's look at it in the weekly time frame. Same again, you could probably argue from the weekly time frame from this point, and then maybe making this a little bit more shallow, you know, you've not got much there to play with other than the fact that an absolute parabolic sequence of events where we had how many weekly candles? Unbelievable. Remember when we were talking about how many, you know, red candles we were getting? Look at this sequence here. Absolutely mega, 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 mega run, right? So it makes you wonder, where is Bitcoin going? And you've got to look at the other financial climate and understand what's happening. Now, let's talk a little bit about that financial climate. Quantitative easing was when this region here was from June 2020 up to basically now, right? Let's just say. So we can talk about this as a bullish move. We had quantitative easing. That is where stimulus was brought out. This was when the money printer was turned on and everyone was doing the old money printer burr. You know, basically $9 trillion went into the economy, into people's pockets, into this market and into other markets. Hence why I talk about the likes of that, you know, the NASDAQ. It's mental, it's madness, and it's kind of like, okay, what's happening next? Well, What's happening now is a thing called QT, quantitative tightening. Basically, the reverse side of what I've just talked about. Money getting pulled out of the market. So from the 1st of June, they stopped buying bonds, right? They stopped buying them back. From the 15th, I believe, I wouldn't really quote me on this, but they are starting to pull out money. It's roughly between $1.1 million per second. Or per minute. Per second's a bit mad. Per minute, I think it is. But either way, they've got to find $9 trillion through all kinds of different metrics, means, pulling money out, all these kind of stuffs, right? It's mad. There we go, got that back. So when we start looking at that, then we start looking at, okay, where can this go? Well, you got to look at the fact that BTC hasn't retraced as much as some of the other assets, right? BTC is still sitting here. Ethereum in the last 30 days has lost 23%. Bitcoin in the last 30 days has only lost 3%, right? You got to look at that as a metric. If Bitcoin loses this level here, this whole region around this point here, let me just clear this up a little bit just so it shows a little bit more. Oopsie, get rid of that for now. You know, we've got this level of, I think, hard resistance now. We've also got to look at this level here, right, where this region is. If we lose that level, in my opinion, I think this is where it's going to get very interesting. If we do start recorrecting and going back towards that 25k level, and if we do start going into this region and going to retest the all-time high in 2017, 2018 sort of period, guess what? It's going to get pretty ugly for a lot of altcoins. Now, let's flip the bias over to altcoins. Why altcoins? Well, the one thing that I've kind of noticed that is vanished from my chart for some weird ass reason is the BTC.D dominance chart, right? So let me just have a quick butchers on here. I don't know why that vanished. It has though, literally just vanished. Bear with me. Boom. Hello. So this again is looking pretty important to what is happening. This is why a lot of altcoins have been dropping significantly over the period of time. So if I just go into CoinMarketCap just to show you this. So on my CoinMarketCap, look at the last 30 days, right? BTC 3%, Ethereum, ooh. Apart from these two, bit of hype though, between this one especially, madness. XRP, everything else is looking pretty shocking, right? Over the last 30 days. It is indicating that altcoins are getting weaker because the dominance of BTC is starting to go up. If BTC has a big move, guess what's going to happen? Oh, it's showing strength against the altcoins. Obviously, this is going to go up. So in terms of the metric and understanding what dominance does, up means bad, down means good, right? We are currently at a level of interest where it could be, obviously, technical analysis doesn't really give you much bearing other than it's an index, but you can look at where things can get a little bit ropey. Traditionally, though, if this is happening like this and it's starting to turn around, it's because a lot of altcoins are at levels of support. Ideally, you're just flipping the narrative upside down, right? So when we're looking at that, we've got to look at a few other things. What is happening elsewhere? Well, when we're looking at Ethereum, big, massive swing to the downside, right? So you can see this on the weekly time frame, hugely big swing. This is why I'm looking at $400 below, or like $500, sub $500 for a potential buy order here. This is the old all-time high, literally on the nose. I think we're going there. I personally think that. Look at the stablecoin dominance at the bottom here, which is the same narrative. I've just flipped the chart upside down. If that is going down, guess what's going to happen? So is the market, because money is not going into altcoins. It's actually staying in USD, and the dominance of USD is getting bigger because money is going A, out of altcoins, B, potentially out of Bitcoin, and just sitting there, just in a cool chiller. So it's important to note how the narrative has all changed a little bit over the last few months, even though we have been saying, and we've been doing live lessons about bear markets and stuff for a long time now, talking about, right, we're in a bear market, boys and girls. Forget everyone else. This is happening. We have dropped so much, yet you will find people on accounts do this, go, oh, but look, numbers go up. You know, hold on. Let me just make this look a bit more, make it look like a bull market. Like, people be like, oh, no, but we're in a bull market. We're going to carry on going up to like quadrillion. Fuck off. Honestly, like, people do my head in with stuff like that. It's madness, but you got to look at the fact we've impulsed so much, we're going to pull back. And it's all about where do we pull back. Now, this is just on a log scale chart, right? Just a big thing. Some people talk about this. A log scale is only good for going back and looking at data from the past. Do not do this, right? Top tip. If you want to look at certain things, yeah, look at the future, but change your Fibonacci, because this is where people go wrong, right? So if we're going to look at the overall bias here, so let's just say start at this sort of the bottom of this move to the top of this move, right? What I've done here is I've not changed my Fibonacci. This is where it's important. So you can see here, if we pull back, we're at the 618. If we go back towards 786, we could be actually hitting the, $1,100. And obviously, if we add more Fibonacci's, you're going to get more and more metrics, right? But we're on the log scale. Now, what people tend to do is they go like this and they go, right, let's change the Fibonacci to log scale. This is where it goes a little bit pear-shaped. Why? Because when you start looking at it this way, this is where you get these randomized predictions, which doesn't really make much sense. I'm talking about the future here, right? The future. Bear with me. So going past, in the past, it would actually be okay. That would work. But when you look at the future, it goes a bit barbaric, right? Really barbaric. So make sure you understand that. But realistically, if you're looking at the past here, you want to look at certain metrics, you want to make sure it's right. But the log scale is very, very, very dangerous, especially if you're looking in the future. This is why you're seeing these people go, oh, but Bitcoin's going to go to like 400k in like a next move. Is it? How? Okay, cool. Well done. Congratulations. But realistically, it's probably not. So always have it unticked. And yes, utilize it to look at data over a period of time. Yeah, crack on. Happy days. It looks a bit neater and cleaner, but don't be going too mad. But let's just talk about it in a realistic aspect here. Let's talk about the fact that, future price points could actually go much higher. And I think they will with Ethereum. But don't get too overhead. But as I say, right, if we remove the fib, looking at the log scale, bull market, what's happening next? We've only had 2 3-month candles, right? In terms of monthly quarters. The state of this, for example, it would not shock me in the slightest, and let's talk about it. The level that I'm looking at is roughly around $500. That is like a 90 or 89% correction, give or take. Wouldn't shock me in the slightest, but you got to look at these levels here as well. Look at like that body closure there, right? 731. That wouldn't shock me in the slightest if that happened. It just wouldn't. And this is why you got to prepare for everything and understand why you always buy as low as you possibly can. You always try and get the good kind of orders, the best fair value, which is what we aim to teach you in terms of just have a bit of patience, just wait for an order, don't just FOMO in. You got all the time, technically you got a lot of time, not all the time in the world, but you got a lot of time in a bear market to kind of plot and plan your moves. Now, even if, right, this is where I'm going to start flipping it upside down a little bit. We may well bounce very, very soon. I think we are due a bounce for obvious reasons. This is a honking set of candles on the 3-month time frame. On the monthly, you can see it. Wouldn't shock me if we do bounce up again, right? And we start to run in between these little gaps here and may well test these levels of resistance. So you've got a level there for obvious reasons and a level a little bit higher as well towards 40k. But that would still put us firmly in a downtrend. For us to break out of this bear market, we have to fly through basically 45k, create an obvious higher low, and then continue going. But I think that is very, very unlikely, judging by the metrics, the data, the information that we've got from the traditional market, the data that I've got from my own YouTube channel and Twitter and all sorts of stuff like that in terms of sentiment. The market, no one's here. Like, the market is very, very boring. This channel alone is getting more views on certain videos than what some big channels are getting, which is mad. And we've only got like 2,000 subscribers. Make sure you subscribe if you like the content. So I'm going to end it at that. I don't want to go too deep on this video because, yes, the market is pretty boring. If we go to the lower time frames, this is what we're in. This is the 4-hour time frame. It's a scalper's paradise. I'm not a scalper, never have been, never will be. I'm a swing trader. I like to play swings. But for me, the momentum is not as a swing trader. The momentum isn't even with the bears fully yet. At the moment, it's sideways. It's a decision time. But the decision, is hugely important in terms of what Bitcoin's going to do. Because if we are going to retest those lows again, you're going to see a lot of weakness in those altcoins. You're going to see the BTC dominance go up. You're going to see the altcoin USD dominance, the old USD dominance, this chart here, is going to go up significantly as well, because the metrics will tell us that, okay, money is leaving the altcoins. People are getting a bit shook, or basically they're getting shaken out of their positions. So you've got to be somewhat careful. Anyways, enjoy. I shall see you again soon.